On the Tape is presented by CME Group, where risk meets opportunity, and iConnections, reimagining how the investment industry connects. A very warm welcome to the On the Tape podcast. Guy Adami, joined as always by Danny Moses, very handsome Danny Moses. Dan Nathan, the ever-shrinking, very handsome as well.
Yes, he
Dan
looks
Nathan,
very
but
good.
we have a treat. I mean, do we have a treat today?
Big
yes
treat.
or no?
Big.
Do you want to tell? You should tell the people what the treat is, because I'm not worthy, as they say.
We have my former partner and mentor, Steve Eisman, with us.
Stop it.
Yep. You were with us in Florida. We had our first reunion.
Yes.
It was Vinny, Porter, Steve, and myself, right, on air.
It was unbelievable.
Steve always has some good one-liners. I'm sure we'll have many today.
He had great one-liners,
Yeah.
and I was fortunate enough to meet Steve, your lovely wife. She is clearly the looks and the brains in the family. I'm sure you're told that all the time.
Every day.
Well, and justifiably so. It keeps you grounded. But you're a legend in our world. And listen, Big Short fame and all that, but it goes far beyond that. So you, again, you're sort of on the Mount Rushmore of the investing community. There are probably more than 4 people, but you are clearly one of them. Is that fair to say? Yes or no? It's binary. I mean,
Mount Sinai or Mount Rushmore?
I'll just say let's move on to the next.
Okay,
one.
we'll move on to the next thing. As Danny Moses told me, we like to get into these shows in various different ways. You sent him a list recently of all the shows that you like a top 50 list of television shows.
There was 120.
120, but there were 50 of, and then for those of you who like violence, here's some violent ones. I mean, you really broke it down. But number 13, I believe number 13 on the list was Chernobyl. True or false? I'm not asking you
It's definitely on.
13.
It's definitely on the
It's
list.
definitely in the top 15.
It's definitely on the list.
For you folks that didn't watch it, I think this was circa 2019-ish.
Yes, before
right?
pre-COVID.
Pre-COVID. And I think it was a 6-part series, if I'm not mistaken. 6 episodes.
Yes, it was 4 to 6.
Spoiler alert, the thing melts down.
Okay, thank you.
I just want
It's
to
not
get
a
that
spoiler.
out there. Okay.
It was beautifully filmed. It was an exquisite piece of whatever you want to call it, Danny. It was wonderful. Here's how I'm going to sort of set this thing up. And feel free to say, Guy, you're an asshole. Most people do this. The theme of that, there were many themes of Chernobyl, but to me, the overriding theme was hubris. Hubris. Controlling something you have no control over. As a matter of fact, I think the final episode takes place in the control room when they're doing the test to take down the reactor. They need to do a test. They need to shut down the reactor. And in trying to bring the reactor back up, that cat running the room starts taking out control rods one by one, trying to get a reaction until all the control rods were out. And then obviously the reaction that he wanted to get, he got in spades and they weren't able to control it. True or false?
I don't remember that well, but I'm guessing you're right.
A stress
Sounds right.
Yes.
I bring that up because it's hubris to suggest, he thought he could control something that he clearly couldn't. In the same way, Steve, and we're going to back into this, the same way central bankers, the hubris around central bankers, begging for something, in the case of our Federal Reserve, inflation, begging, we need inflation, we need the reaction, taking control rod one out, the other in the form of monetary policy, and then thinking they can control it. They have no control over inflation. We saw it this week. Inflation is still a problem. I'm perplexed at how well the market trades in the face of the hubris surrounding central bankers. So let's start there.
Hold on, before he answers
Okay, you can
You're
jump
talking
in if
you
you
have
want.
Steve Eisman here, and then you bring in Chernobyl.
Yeah.
How could you not have equated that to the subprime mortgage meltdown, which was actually a meltdown that people talk about hubris that was happening at the time? That's where I would have.
Well, am I on this show, or are they just going to keep talking?
Anyway, so there you go. Okay, so all those we put that all in a cauldron.
You're surprised at the market. You're surprised the market is trading so well. You're focusing on the wrong thing.
Okay,
it's just not relevant.
Talk us through this.
I mean, generally the market loves free money. I think we could all agree on that. But at this point, even if the Fed's going to cut rates, it's only going to cut rates once or twice. It's irrelevant. When the Fed was raising rates 500 basis points, that was relevant because that reset the price of money. If the Fed cuts rates 25 basis points once this year, and maybe they cut again once next year, who cares? It's a rounding error. It's not what's driving this market other than on Fed Day. I mean, I find Fed Day amusing because I went to Jewish day school. When you
recently.
not that long ago.
Oh, no, I don't know. You said it like I went to Jewish day school.
No,
on
I
Fed
did.
Day. I don't know.
And you know, you go to Jewish day school, you study Bible like it's the word of God. Every word, every letter is important. And when you know, on Fed Day, when they put out the announcement at 2:00, people treated it like Moses coming down with the tablets, and they're checking to see if the Ten Commandments are worded the same way. I find the whole thing ridiculous. But like I said, I just don't think the Fed is relevant right now in terms of what's driving the market.
Well, the Fed may not be relevant on Fed Day, but the amount of debt, and we're going to get into this in a second, but rates have always been the cause of things unraveling. You made your career early on when I met you. So let's back up. In 1996, I met you at Oppenheimer. You were covering financial services. I know you got there through law school, through working with these companies, and you got up to the podium. I tell the story all the time in 1998 and said the following 5 stocks are going to zero. They were subprime auto.
By the way, you go to jail for that today.
Right. Ugly Duckling, Ames Financial, all these things. So here's Vinny and Meredith chasing you around, and you left the podium. And I go, what did he just say? What does that mean? And how do I make this call to my clients, these institutions that I follow? Well, that was exacerbated by rates going higher, the Fed raising rates. Okay, because you're watching the actual math of what's happening in these pools of money, and you're watching late payments, delinquencies. Okay, so we got that. Fast forward to us being together from point in 2006, the math led to the conclusion of what was going to happen. For some reason, you are not willfully ignoring or just don't think it's as important when it's on the government's balance sheet.
Willfully ignoring.
Willfully ignoring.
Willfully ignoring.
But you're too smart to know that it doesn't matter.
I wouldn't know about that, but I'll tell you why I'm ignoring it.
Hold on. If it was a company, the United States was a company.
It's not a company.
Okay. If it was.
But it's not. That's the point.
You're one of the few analysts to have sell ratings on this.
But you're making an analogy that is false.
Okay. Let's go with how this is sustainal in this environment.
Let's go with that.
Let's do it.
Okay. So number one, I'm not an economist. Okay. I was an analyzer of credit quality of financial companies. So the only comment that I have to say with respect to people such as yourself who are worried about...
You made me a worrying person.
I understand that, and I apologize to your wife.
All right.
Is that... I've said this before. I like to call you people the the deficit crowd. You know, if I may imitate Jackie Mason, the routine that you guys like to say is the deficit. If it grows by $1 more, we'll be dead. Right. That's what Jackie Mason would have said. So that argument's been made for 40 years. The same argument. At every point that the deficit has gotten bigger, people have made this argument for 40 years. And my only response to you is not that necessarily you're wrong. Maybe one day you'll be right. But when somebody makes an argument for 40 years and nothing happens, you got to have a little humility and say, you know what, maybe there are things going on here that I don't understand. And it's not like rates are going, people are talking again about the deficit. Is it impacting interest rates? It is not. It's not impacting it at all. They trade inflation data, they trade economic data. There are no bond vigilantes, none.
But to me, it hasn't been 40 years. It's been 15 years.
Well, that's you.
No,
there are
15 years.
There are people who are older than you who've been making that argument for 40.
That's fair.
Some of them are dead.
You and I saw in real time the government absorb all the problems in the markets with QE 1, 2, 3, 4.
Yes.
So that was a change in how things operate. Now I feel like at some point you got to kind of burn your way back through the atmosphere and undo all of that over a period of time. Maybe it lasts over 20 to 25 years and we never feel like the ultimate pain trade. But my feeling on it is the normalization of rates historically, the 40 years that you want to go back, we can sustain 5%, 6%, 7%. That's what 10 years have been. But this time it's different because the amount of government debt that needs to be funded. So tell me, what is the solve if it does come to the point for how we're going to cure this debt issue? Because if you raise taxes, right, we're going to hurt the economy. So pick your poison. How do we get out of this?
I just don't see it's a problem.
Okay.
I don't see it's a problem. If there'll be a day where we'll all come into the office and we'll look at our screens and we'll see that the 10 years up 50 basis points, then we'll all say, the deficit. Until then, it's not relevant. It's just not a problem.
Okay, I'm going to go a different route.
He's going to pivot.
No, you going to White Lotus?
No, I'm not going to White Lotus. Okay. Although second season of White Lotus, which you probably watched, was filmed in Sicily.
Yes.
The San Domenico Palace.
The beautiful hotel, I hear.
Exquisite. We can talk about that later. Anyhow, you remember the movie with Tom Hanks? He would Forrest Gump. Remember that movie? You're familiar.
I've seen it many times.
I mean, there's a scene where he decides he's going to run, right? And he's by himself. Like he's running. And they're playing Against the Wind. Remember Bob Seger?
Of course.
And then, next thing you know, there are like dozens, if not hundreds of people following him. He's their Sherpa.
Right.
He is their Tenzing Norgay.
I just kept
You
running.
are our Tenzing Norgay. Now, the problem is, at one point, he's running and he just stops. And he says, I'm done running now. And he leaves all these people in the lurch. Like they're looking around like they don't know what to do. That's the way I feel about it. You are our Sherpa. Like you spoke our language. You were the guy that pointed out all the crazy shit that go on, all the things that could go lower. And now you abandon us for like the other side, maybe to your benefit and your health benefit, because you look like a much happier guy now. But we need the old Tenzing Norgay. We need the old Steve Eisman to be our Sherpa. Am I right in bringing that up?
Well, you can bring up whatever you want, but I'm still not going to change my
He's
mind.
so happy now.
I'm very
I've done
happy.
everything I could
He's
to poke
so
him. I
happy.
got to poke the bear, and there's nothing to poke here.
Well, Steve, do you worry though about things like Social Security? So
No, I don't worry about Social
So
Security.
don't you think there's someday we could wake up and it's just unfunded? You know what I mean? And when we just have millions and millions of citizens
Look,
who've been paying
here's
into this
the
stuff.
way I look at it very simply. The U.S. bond market is the most liquid bond market in the world, and that's one of the main reasons why we're the reserve currency of the world. Until there is something else where that big, massive money can buy outside of the U.S. bond market, we will remain the reserve currency of the world, and these things are not issues.
So you and I have never
And
talked.
China is not going to replace us because China's got its own problems.
Well, China's selling our treasuries.
Europe is not going to replace us. So you show me a bond market that can replace the U.S. and I'll start to.
I totally agree with you that the U.S. is the sexiest. On a relative basis, it's a place where the money is getting parked, for sure. Gold is starting to replace a little bit small. It's small, but you see what's going on in gold, right? You and I haven't had that conversation. I assume you don't care for gold.
I don't care for gold.
Long or short, doesn't
Long,
matter.
short, not involved.
Doesn't matter. Okay.
I don't even look at it on my screen. It's on
So-
my screen. I don't look at it.
All right. So when you're looking at companies now, and God bless you that you're focusing more on longs than shorts. I envy that. When you're looking to make a thesis that's driven, some of your theses are driven by government spending. Some
Yes.
of it is okay.
That's true.
How do you incorporate that thought process into this infinite checkbook that may or may not be there?
Don't worry about the checkbook until I have to worry about the checkbook.
Right. So some of the things that are going on right now, you talk about infrastructure.
Mhm.
Been a great trade. Still is, I think, probably has a lot of legs left to it, in your opinion. Can we talk about that a little
Sure.
bit, just on the infrastructure
Happy
trade?
to.
Okay, and the names that you're kind of focused
So
on.
let me just
within
backtrack just for a second.
Sure.
I think there are three. Look, in bad times, people focus on balance sheets and credit quality. And in good times, they focus on stories. And this is one of the most thematic markets I've ever seen. And I think there are three very, very dominant stories, and they are AI, everything having to do with infrastructure, and crypto. And I believe in the first two. I don't believe in the third.
Mm-hmm.
Not that I would tell you to short crypto. I think that's impossible, but I just don't believe it.
So walk us through because infrastructure, I mean, we could rattle off a bunch of names. Karen Fineman talks about, what's the name?
United Rentals.
United Rentals, URI all the
URI.
time, and that stock has been a monster.
Yeah.
But, again, it's made sense in terms of the infra, and that's sort of a tangential, I guess, infrastructure play. Sort of drill down a little bit in terms of, is there still runway left in this trade? 'Cause
Oh, there's
it's come
10
a long
years.
way.
There's 10 years to go. I mean, there are mega themes. There's onshoring, which is a result of the fact that the world spent 40 years creating a supply chain that was global, extremely efficient, and very inexpensive. And it turned out through COVID to be very brittle. So you're a CEO of a company and you had supply chain problems during COVID. Nobody's going to blame you because nobody predicted COVID. But you get one bite of that apple.
Mm-hmm.
But by the way, when you look at boards, most people on boards know almost nothing about the companies that they sit. They're not experts in that industry, but they understand when you had a supply chain problem. You can't be a CEO and have a supply chain problem again. So the onshoring thing, which is probably only in its third year, let's say, is going to go on for at least another 7 to 10. So that's one theme. Second theme is data centers and everything having to do with their construction. The third theme is the grid, which prior to all this GPU stuff of NVIDIA was a big issue because there hasn't been growth in electricity demand in the United States until the last few years. Now it's growing every single year, so we have to upgrade the grid, and the whole GPU and the demand from the data centers increases that. And the last is greenification. Those are the big four. And then you turbocharge the big four with the IRA, the IIJA, and the CHIP Act, which is about $1.2 trillion over 10 years. These are very powerful secular themes.
So let's granular for a second. Who wins to the upgrade in the grid? Is it a Con Edison, for example, or is it the people that are going to help them upgrade the grid?
You know, there are a few utility companies like an Xterra, which have a partial greenification story. But, you know, utilities are very long-term. You know, they'll build a new plant. They'll get permission to have a return for it. And then they're very interest rate sensitive. So you could invest a little bit in utilities, but that's not the best way to do it in this theme. It's part of it. You know, the companies that benefit from this would be the construction companies that service the utilities like Quanta. And then there are a whole bunch of engineering companies like an AECOM, Jacobs Solutions, that provide engineering services, consulting services to that industry.
Yeah, we had the Jacobs Solutions CEO guy on Fast Money a few weeks ago. And again, here's another mega trend in the healthcare space, GLP-1s, right? And you know what they're talking about? Building more capacity to make more of these drugs and the delivery mechanisms of that. And I thought that was really interesting. But Steve, going back to utilities for a second, I look at the market that we have right now. We have an S&P that's up 11%. I'm looking at performance by sectors on the year. The best performing sector I see is utilities this year. So again, is it related to?
I don't think that's related to.
Okay, so that's.
I think that's a pure utilities dramatically underperformed in 2022 as rates went up. They underperformed for most of last year. And now that people think the rate cycle is over, it's a catch-up.
Yeah, and nothing defensive there and nothing fundamental. You just think it's a catch-up because I'm looking, again, to your point, on a one-year basis, utilities are only up 6.5%, but they're up 14.5% this year. Are there, like, so Guy just mentioned individual names. How do you put together a group of sectors that should benefit over 10 years and basically diversifying away from some key themes? Because let's just say you believe that data center is going to be a thing from here on out. There is going to be a cyclical downturn. At some point, there's going to be a move lower. And a lot of those names that are exposed to that could get cut in half. Let's be very clear on that. So to me, infrastructure is not just a layup, you know what I mean? Like cure-all for a lot of things.
Look, a lot of these companies are, let's just call them industrials for simplicity's sake. They have a very big cyclical element to them. What they have for the first time in our careers is a real secular tailwind that is really doing a step function on their growth rates. So companies which traditionally would grow revenue in the low single digits are now growing at high single digits.
Yeah.
That's a big change. Does that mean that they're not cyclical anymore? It does not.
Yeah.
But I don't see a recession on the horizon at all.
But one other point I just want to make, and this is something I think lost on a lot of investors who like to key in on big secular shifts. Go back 5 years, you could have said some of the same stuff about generative AI, about crypto. You could talk about energy consumption. You could talk about data center build out. You could talk about demand for GPUs. You could talk about disruption in the financial services or a whole host of other industries. And that kind of fell flat because at the end of the day, you don't give a shit about gold. You don't give a shit about Bitcoin, right? But like Bitcoin, the only bull case for Bitcoin
I would say that more elegantly, but
yes,
go
right?
ahead.
Okay, but the only case for Bitcoin right now is that it's a scarce asset, really, for all intents and purposes. Because I sit here and I listen to a lot of people turn themselves into a pretzel about how it's going to redefine, financial everything as we know it, and there's just no use cases for it right now.
I agree with that.
So my point is, like, going back to 5 years ago, you could have made a lot of the same arguments about generative AI, you know what I mean, about crypto as people are making about that in a lot of the same areas too. So I just wonder if we're going to have a cyclical downturn while the long-term story of generative AI is yet to be realized. You know what I'm saying?
Look, I'm never going to say we can't have a recession. Yeah. But last year everybody was predicting a recession at any minute, and it's the most predicted recession that never was. I don't see any data at this point that would tell me that there's a recession.
So the consumer stuff doesn't, retail sales softening, consumer sentiment going lower,
the high-end consumer is strong.
Yeah.
The low-end consumer has issues, but the low-end consumer has had issues for 30 years. So I don't see that as a driver of the market.
So as far as we've seen the stats now, subprime auto, subprime credit card, we're seeing it go now. It's finally reaching back to levels people forget that pre-COVID, we were on our way to a normal cycle, and then all the stimulus came in and everything like that. So old Steve, there's certain names like Upstart and Affirm. You always could find the wolf in sheep's clothing, so to speak. I know you still look at some of these companies. So you are watching the lower-end consumer, and it is a market. It is an economy that is literally the haves and the have-nots at this point. And the haves tend to be driving things, and we'll get to the election stuff in a minute. But in terms of stuff you're watching, that doesn't concern you at all because you're not trading those stocks, or is it something you're paying attention to?
It's just that the consumer is not over-levered. That doesn't mean that the consumer can't have credit quality issues. But, the type of leverage that the consumer had, pre-2008 doesn't exist today. So I don't think it's just not a big issue to me at this point.
So you've always been a champion for people, common people that didn't have access to things. You were kind of not anti-Wall Street, but in a way looking out for what Wall Street was doing to people. In 2010, which I think was a highlight, at least for me, and I think hopefully for you, was the subprime goes to Washington. And you went down to the Senate. You testified in front of the Senate in June 2010 on the for-profit education. What a scam it was for two reasons. A scam that people thought they were getting an education, would get a job after and didn't, and using taxpayer money in order to do that. You actually stood up, I believe in that, and paid someone's tuition off while you were sitting there because
I forgot I did do that.
Yeah, you paid her tuition. It was in the $20,000 or $30,000 level. Meanwhile, I'm sitting at the trading desk. People think you're doing it because you want these stocks to go down. I actually put in a self-inflicted trading ban, if you remember, like that. I'm like, we're not trading these stocks for a week before, a week after, all the for-profit. But you've been a champion, like for the people. So the things that are out there right now that you're kind of seeing for people that are out there, because I know you care. And so what are you focused on right now? What do you think is unfair happening right now to kind of people in the country or the people that feel like they're not a part of any of this? They're not part of the stock market. And how does that play in to kind of
it doesn't, I mean, I can have, look, we could have a moral conversation about politics and what I think about, various parts of the economy. I don't think it's relevant for the market. I just don't, that part of the world doesn't have as much debt as it used to have. Whatever debt they do have is not owned by systemically important banks, and those banks are not that levered anymore.
I guess what I'm saying is it used to lead you, it was a trade that would lead you to the righteousness.
Yes.
In terms of
facts change, I change.
All right, let's put this in another context. President Biden is getting very low marks, at least by registered voters or likely voters on the economy. Okay,
Yeah.
So we have a situation where, to Guy's point, stock market is making new highs. We have disinflationary sort of readings that has been causing that, right? The Fed is kind of on, they're kind of setting the stage for a rate cutting sort of cycle. We've had oil come in, we've had the dollar come in a little bit, right? We've also, though, on the flip side of that, we have unemployment at still very low levels. I think 40, 50-year lows, that sort of thing, still under 4%. We're seeing, consumer confidence start to wait a little bit. We're seeing retail sales soften a little bit. We had a Q1 GDP print that came in below, expectations and below the 10-year average prior to COVID. So, the Fed's in a little bit of a pickle. We know Fed funds is at 5.5%. Fed fund futures are pricing maybe, 25 basis points. To your point, maybe we get 50 this year, that sort of thing. But relative to inflation, you know what I mean? We're still very accommodative on the rate front, right? So you have easy financial conditions. You have a consumer that doesn't feel great, and they don't feel good about the economy. They don't feel about, like going forward, the security of their jobs, that sort of thing. It's just a weird place to be, right? So the market, to your point, you just said, I don't care. You know what I mean? Like the market keeps going.
I don't care. The market
doesn't care.
Right?
That's what I mean.
The market doesn't care.
So how do they start? So I guess my question is, how do they start to care? And then the question is, as we get into November 5th, if it looks increasingly likely that Biden's going to lose, does that just supercharge everything? Because we know we get the tax cuts renewed from 2017, right? We know that there's a whole host of other things. The old administration was never able to put through infrastructure, but look at all the infrastructure this one did. And it's just interesting to me that Biden gets such low marks when things feel pretty good for the most part.
Was there a question in there?
When does what changes? What you know what I mean?
Look, if you want to talk about the election, the election's done.
You do think
it's done. The election is completely baked. I mean, to go back to our subprime days. In August of 2007, by chance, Danny and I were on Nantucket on vacation. And while we were on vacation, the subprime market completely ended. It just literally ended. And when you think back about it, in August of 2007, the financial crisis was baked. The rest was just an inevitable play. As far as I'm concerned, the election is done. The only people who don't know are the voters.
Okay, so when you say that, because I don't think a lot of people know, you think it's a foregone conclusion that former President Trump is going to be the newly elected President Trump in November?
100%.
100.
100%.
We'll have to wait.
Steve, and I don't mean to be disrespectful. Do you know how ridiculous that sounds?
I know it sounds ridiculous.
I mean, it sounds. I'm
I
just saying
know
and
it
it's not.
sounds
And
ridiculous.
again, because
but I think it's inevitable. I'll
but
lay it
think
out
about
for
this.
you.
You just said this. Between now and November 5th, you think of the things that could happen. I just laid out a case where if the market doesn't care, if the S&P's at 5,700, Biden's getting reelected. Because
that's not even relevant.
You say that, but what I'm
relevant.
saying is like if it continues to go,
You
that means
understand?
that so many other things are going
well. I don't
well.
think it matters who is president as for the market.
I'm not talking about the market. I'm talking about your 100%
And I don't,
prediction
and I
that
don't
the election
think,
is
and,
big.
and I don't think it matters where the market is with respect to the election at all.
Well,
it's not relevant.
I'm going to jump in. I have to agree with Steve on this one. If the stock market was the economy, then Biden's approval rating, he'd win the election.
Look, I'll just lay out for you the election.
So-
Very simple. Very simple.
Yeah.
The protesters on these campuses, and this is pure election analysis. I'm
Yeah.
not telling you who to vote for, and this is just my opinion. The protesters on college campuses are very quickly becoming the face of the Democratic Party. That's not 100% true today.
You're saying
but
that.
it's become,
You're saying that in May. I mean, like how many elections have you seen?
I'm going to walk you forward to August when that's the final nail in the coffin. In August, it's the Democratic Convention. It's in Chicago, which is going to have its own irony because of 68. And all the protesters that are on those campuses are going to go to Chicago and they're going to protest in front of the Democratic Convention, and they're going to do the same thing. They're going to scream and yell, "Death to Israel," and they're going to scream, "Death to America," and they're going to burn Israeli flags, and they're going to burn American flags, and it's going to be on everybody's Twitter feed, and the whole country's going to watch, and the whole country's going to be aghast.
Mm-hmm.
And as soon as that happens, everybody, then it's really going to.
Did you notice how many protests were at commencements over the last week? 0. So you're talking about something in August when this convention is going to happen and these students aren't going to be even on campus. And you're telling me they're all going to go to Chicago. And I think the likelihood of that is probably much less than you think. And I think, so I'm just saying that it's also interesting to me that the New York Times, Siena College, and I think it was the Philadelphia Inquirer had a poll out today, and they were looking at battleground states. And Biden is losing in every one in this poll except Michigan. Michigan is the one where you have lots of Muslim voters. You have obviously a lot of college age kids because 2 massive schools there or whatever. It's a very important state. I just think that like it's so early right now. And we forget, we stare at FactSet screens and we stare at news all day long and we talk about this stuff. And you don't think any of this stuff affects the markets or vice versa. But most of America don't look at politics the way we do. They don't look at markets the way we do. So we're sitting here in this little microcosm. We are some of the most informed people on the planet on all of these issues. So we think about this stuff all the time. I just think that I think it's 50-50 right now. And that's not me just
I'm not going to argue
the
with that.
handicap, I mean, let's bring it back to the bookmakers. It's Trump's favor by a little bit, but
just
not by
well, that's
right.
what I mean. And so what, I mean, listen.
Okay, I hear you. I'm telling you. As far as I'm concerned, it's 100%
let's play it out through the market, though. So let's say Trump was reelected. What does it mean for U.S.-China relations? What does it mean for tariffs? What does it mean for protectionism? All the things you were talking about before.
Sure.
Let me ask you this. I would submit, again, I don't know, but a Trump reelection is inflationary by definition. Thoughts on that?
On the margin a little bit, because there'll be some tariffs on some things. But, don't forget that, and I also think that because of onshoring, the overall level of prices of the United States would be higher than otherwise would be. But do I think that the tariffs that Trump might impose is going to be wildly inflationary? I don't. I think it, maybe on the margin a little bit. But I don't think it's in terms of the market, it's that relevant one way or the other. I think there are certain groups that might do better in a Trump administration, but I don't think it has an overall impact on the market.
Well, I think the banks, when we've traded a sector together for years, that obviously probably one of the most important is healthcare and financials are kind of the 2 areas that are always impacted by an election.
So healthcare will probably do better because but they'll have to change the law about drug pricing, which is already in effect. That'll take time. I don't know if they'll get it through. And then, in terms of the banks, people will speculate that it'll be a more lenient regulatory environment, and the banks.
I actually think
the banks will have a pop, but till they change the regulatory apparatus, it'll be over a year.
I actually think it's more important the Senate and the House, what happens there too, in terms of is there going to be power all to one party or not. I think that is
don't
the more
forget, you
important.
need 60 votes in the Senate.
I know, but that is right. I was going to say that's more important, I think, for regulation and so forth. But listen, we traded a sector. I mean, you were in the White House during the crisis, and we traded a sector that was fully dependent on what was happening. We were the center of it all. I mean, we were obviously. So I think for a lot of
and
people,
now we're not.
But I think, well, I still focus. I do OI everything, but
No, but the
that's just-
financial services sector is not the center of it.
No, they're safer. It's different. I think the non-bank system is something that we can't even quantify at this point. But in terms of how to trade that, and people that are listening to this from the experience that you have, and we all kind of have in the markets, is there are going to be trades that are going to occur. And one of the things that we can talk about, we talked about 20 minutes ago, is that yes, the perceived tax cuts. There's no tax cuts coming into the budget. We approved a debt ceiling. We took the ceiling off until January 2025 for this election. There's a reckoning. So part of this pull forward potentially of the markets that believe that the Republicans could gain control of everything, to me, is a fool's game, is a fool's errand, because you can't cut taxes. You're not going to be able to do it mathematically. It's just not going to work. So those are the type of things that I'm kind of focused on for if you can fill the coffers, right, in the budget and stuff. You don't care about that stuff now, but I think a lot of the things that normally in a change of an administration would have a positive impact won't be there this time, is what I'm saying. I think we've already front run that.
If it's possible, look, I think the themes that I've been talking about, AI and infrastructure, just have massive legs regardless of who's in the White House. I don't think it really matters that much.
Energy is a space that I think is still very interesting. Big run up. The underlying commodity obviously has not done well over the last month and a half, but I'm not certain that's really telling the entire story. In terms of the stocks, does the energy space interest you in terms of valuation, or just sort of some thematic stories that are out there?
As a general rule, I would say that the traditional energy space is not something that I spend a lot of time on. We have a few, small investments and some things that have real stories, but my problem is that when I came to Neuberger in 2014, back then energy was a very, very big focus of a lot of people in the firm. And so we used to have every oil expert would come into Neuberger. Like, once every couple of months, another one would come in and they would all, try and predict what oil prices are doing. And after about 2 years listening to these people, I came to a very simple conclusion. These people don't know what the hell they're talking about. And nobody does. Nobody has any idea. That it's too difficult to predict. And so, to say I'm going to be a major investor in the energy sector means on some level, I think I can call oil prices.
Right.
And I know I can't. So I don't try.
Other sectors. So on a day-to-day basis, we joked about this a few months ago, like how your life has changed.
Yes.
When you wait. Let's talk about how your life has changed exactly. So
Yes.
your role at Neuberger, what you're kind of doing, and what that looks like on a day-to-day basis.
Sure. So I'm part of my family's long-only business within Neuberger. We run separately managed accounts for people.
It's still hard for me to Eisman long only, but please.
It's long. It's long only,
Yeah.
and it's a very similar kind of day, but it's a much more relaxing kind of day. As I said on that panel in the old days, when Danny and I were working together, I'd get up in the morning and I'd put on the TV and futures would be up and I'd start cursing and my wife would ignore me. And I'd go to the office and Larry Kudlow would get on and start saying how it's a Goldilocks economy and we'd all start cursing him.
Yeah.
And today I get up and the futures are up and I feel good. And I turn to my wife, I go, hey, you want to have some coffee? And we go out for a little coffee together.
So, you know what? God bless you. I mean, I wish I was wired that way. I mean, maybe I'll have a day of reckoning. So let me ask you this, because I know there's still a part of you that's deep inside that's waiting for something to go pear-shaped. And, you know as well as anybody that this has lasted, well, I don't want to put words in your mouth. This has lasted quite a long time, and maybe it has a lot more runway. But there's something out there that's clearly going to derail this. And there has to be a part of Steve Eisman that's sort of looking with your peripheral vision. What's out there right now sort of on the horizon that spooks you, and even in the smallest of possible
You know what?
ways?
Now that you say it, it's the movie regarding Henry. He's Harrison Ford.
Right.
Now I get to know him as the guy after the, God forbid.
After the accident.
After the accident.
Wasn't an
This is
accident.
so where's Henry?
Shot.
Yeah.
Look, I think about it all the time, but I don't have anything. I just don't have anything.
No, but Steve, and what Guy's talking about?
You
like,
don't
what-
believe, this is...
I do believe
People don't believe when I say this, but it's...
But you're going to have to adjust. If you are forced to adjust on the fly.
If something happens, like, look, you brought up something about, the private lending market, the private equity market. Could something happen in that market that would blow up the world? I suppose. But the problem with it is that there's no data.
I don't think you want to look as deep as you used to.
There's no place to look.
I don't think you want to look as deep as you used to.
Well,
You're scared
that's
of
a
what you're going
different
to
story.
see. You know there's some shit out there, Steve.
That's Planet of the Apes stuff right
let's
there.
go back to 2022 because I think it's interesting. Again, really that bear market was caused by the excesses of late 2020 and 2021.
Yes.
And obviously the fiscal, the monetary, there was, the crypto stuff was going on, the SPAC stuff was going on, and profitable tech stuff was going on. And in many ways, that was a very orderly bear market, right? For all intents and purposes. I don't think we ever had a week where we were locked down limit, like day after day and, down. It just felt really orderly. It crescendoed into October. We've had this massive run over the last few years. To your point about 2023, everyone was predicting a recession and they were kind of positioned that way. So here we are now, we've had this massive run, from the lows in October of 2022. What do you think the thing that causes the market to really just kind of, we just got off of, we had a 5.5% sell-off. We haven't had a 2% down day in the S&P 500 in over 300 days or something like that. So Steve, when you think about as you manage these portfolios, you're long only, what do you think about the things that could cause that next really bad year?
The only thing that I could see is if for some reason that I don't know, there's a real resurgence in inflation and the entire debate shifts and says we're going back into another rate cycle hike.
Or not cutting for a long time.
No, not cutting is fine. As long if rates stay here and there's no cutting, I don't care. But if you're going to tell me that for some reason the Fed's going to raise rates another 200 basis points, that's relevant.
But there is an adjustment because there are rate cuts built in 2025. I'm saying we've seen how the markets trade. I agree with you. Whether
I don't agree with you. I don't care what's on your screen.
Okay.
Honestly,
All right.
I very simply, the market is fine with rates where they are. If the market a couple of months from now says, "Oh, we thought the Fed was going to cut rates twice, and now we think zero," there'll be a little correction for a day or two.
What if
and then they'll say the economy is fine.
What if CPI is at 4%, unemployment's above 4%? At that point, you have the signals for like some sort of stagflationary environment. And, that would be the thing. One of the things Fed Chair Powell has said repeatedly is the fear of inflation becoming entrenched, right? And so when you think about that, I mean, the market rally broke out to a new high on Wednesday because CPI just came in line. You know what I mean? Like
you're not going to get it out of him. We've tried every angle.
No, I know, but I mean,
Yeah.
but Steve, I want to mention one thing because I read the book and I saw the movie, and Danny and I, we've been talking about this. We have a group chat. Porter, Vinny, Danny, myself. We threw Jim Chanos in there for a little spice. We talk every day in there. I mean, there seems like a level of complacency to your, like, you know what I mean? Like
Not
about
this complacency. It is you all the stuff that you're saying it's a nice argument.
It's in the markets too. It's
a perfectly reasonable argument.
Yeah.
Is there any data that says that there's anything wrong? I don't see it.
Let's talk about the book and the movie for a second, okay? That scene when it's you guys, Steve Carell and the rest of you guys.
Yeah.
You're a no-name actor.
Yeah.
Rape Fall. And Gosling does that soliloquy about, and were you guys really learning for the first time about CDOs at that moment?
That's a little bit of an overstatement.
Because it was a brilliant scene. He was using the Jenga
But
thing.
it's not that much of an overstatement.
My quant.
Story,
Did you guys know what a quantitative was? A quant?
Yes, we knew what a quant
Okay,
was.
I just want to be clear.
Now, the way the story happened was we were showed all these subprime equities.
Yeah.
And the problem was that they were illiquid. The cost of borrow was absolutely insane, like 20%. You could not put on big positions because they were incredibly volatile. And I think Dan and I were like literally having like a conversation of like, okay, what do we do? And I must have said like, maybe we should look into shorting subprime paper. Yeah. And literally it's like the words come out of my mouth. My assistant says, there's a guy named Greg Lippman on the phone. He'd like to talk to you.
Yep.
So I don't know who Greg Lippman is. So I pick up the phone. It's Greg Lippman from Deutsche Bank. He was looking for a different fund.
Ivory Capital.
He was looking for the guys who actually did fix income at some point. But I said, I'll talk to you. So he started to talk to me, and I said, this could be interesting. Why don't you come in and see us? So he came in and he did his pitch. And that's how it got started.
So he called the desk first, and you can see on Bloomberg, it said Front Point, but then there's like 5 iterations of Front Point. He thought, and he actually saw Ivory that was long New Century Credit Home Lenders and says, this is natural hedge for your long. I go, we're not long that shit. What are you talking about? But it was like when you take your kid to Disney World for the first time and you start learning about these products. Steve was like, say it again. Say it again. Say it again. Say it again. Like, we're like, this does not exist. This product, you can short this product. And I think Steve would agree. Christian Bale, who played Michael Burry, God bless him, had stayed in that trade for 2.5 years before it worked. That'd have been tough for us given the situation we were in, the platform that we were on. And, he stayed in the trade. Our trade worked from day one. But I think what people don't realize is the long book that we had, the short book that we had, that was equities. We could have been much bigger even in the subprime.
Yeah, we had
trade.
all the stuff to do.
We didn't know, but it was a guide. It actually worked out. It worked out really well.
How did you guys get comfortable, Steve, working, I guess, with Michael Lewis to tell your story? Was it something that you had a lot of trepidation? A lot of folks feel like if you kind of peel back layers of the onion about the business, you might have a hard time.
That gets like too much thought. I mean, what happened was he called Meredith Whitney, and Meredith said he should talk to me, and then he came to talk to me. And you got to understand, back then, the way Steve Carell played me, the angry man, I was actually like that.
He should have won the Oscar. He got nominated.
And
he should have won it. Yeah.
He came to see me, and like every other word out of my mouth was "f this, f that." This person should die. I'd like to kill this person. On and on. And I could see as I was out of control. And
I loved it.
And he's looking at me. He's looking like I could see in his eyes. It's like this.
He's like, we got something here.
This interesting guy.
Yeah.
I'm going to take this role.
So he interviewed me 10 times, and I was happy to talk to him. And
he gets Carell. Vinny gets Jeremy Strong. Libman gets Ryan Gosling, and I get Rafe Spall. I know, Rafe, you're not listening to this, but if you're out there, you could have done a little more work on it for sure. But what a time that was for real. So.
Before we get into the Preakness, let me ask you this. I get a kick out of these answers. You're on a desert island.
Yeah.
You can only watch one movie. It's not The Big Short. What is Steve Eisman watching?
One movie. Godfather 1 and 2.
My man. See, that's what I'm talking about.
That's 2 movies.
Well, no, what? I understand
you
what
allow
he's saying.
that?
I allow
That was
that.
the answer?
I allow that
because that was
Well, they made it into the Godfather saga, which was one movie.
right.
Horse's Head.
Well, speaking
of Godfather.
Speaking of the Godfather, and
by the way, just so you know, when my wife and I started dating, and we were just dating, and she was talking to me, and I started talking about the Godfather, and she said that she had never seen it.
What?
And I said to her, I can't date anyone who
That's
hasn't seen the Godfather.
like
And I made her see it.
That's like the movie Diner.
I made her see it.
Good for you. And now, can she quote it, or is she just?
She can't quote it, but I can quote it.
I know. I have no doubt. Because I will tell you, the Jews and the Italians are the same thing.
Yep.
They're exactly the same. Our food's a little bit better, but we're basically the same
I
thing.
agree with that.
Speaking of good food, you could have bought yourself a lot of good food. So look at it. Listen to this for a second, Steve. A couple weeks ago was the Kentucky Derby. You're familiar with this
Steve
race?
likes
Yes,
horses.
I'm very. My wife rides horses.
Okay, there you go.
He spent more money on horses than I've lost on horses.
That I don't know.
Okay. You're right. We'll reconvene on that.
There were 20 horses in the Kentucky Derby this year. 20.
Yes.
Okay. If you had picked 6 of the top 7 horses, in other words, you were able to handicap and come up with 6 out of the top 7 finishers. That's remarkable, right?
Yes.
You'd think you'd make a fortune.
Yes.
You would think that.
You would.
Danny Moses.
Yeah, I lost that one, but because I didn't get the horse that
Don't
won.
gloss
That's
over
right,
it.
But I'm going to tell you right now.
Well, hold
So-
on a second.
Yeah, I lost.
You picked 6 out of the top 7
I did not take
horses.
Mystic Dan. Correct.
The horse that won was not out of one of those 6
It was not,
horses.
and I'm going to go against him again. So remember, Bob Baffert.
Preakness this week.
Bob Baffert's banned from Kentucky. They won't let him run at Churchill, right? So he had to pull his horses, and he's pointed them to the Preakness. He had 2 horses going to the Preakness, Muth and Imagination. Muth is scratched, got a fever, he's gone. Imagination is my friend's horse, Starlight Racing, Starlight Partners. They won the Preakness last year with Bob Baffert. Bob Baffert has won 8 Preaknesses, the most of any trainer ever. He's now coming out of the 9-hole because Muth scratched. Everyone's moving in a little bit, so he's on the outside. He's in a great spot. He's now 3-1. You can't bet fixed odds, so you have to wait and see what happens. But Mystic Dan is the 5 horse because he won the Derby and he's running. There's no way that he repeats, and he's 8-5.
Big overlay.
That horse was out of the race, and imagination would probably be even money, but you're getting 3-1 on
I
imagination.
barely even know what they're talking.
Well, imagination.
I'm sending an email.
Take the 9 horse. That's nice, Dan. Take the 9 horse imagination across, and if you want to put it in an exacta, you put it with the 8. It was Tuscan Gold, which is Chad Brown's horse. So the 8, 9 exacta box, but let's take the 9 to win across the board. Avoid Mystic Dan.
8, 9 exacta box, 9 across the board.
There you
Take
go.
Mystic Dan out again.
That's it. No more Dans. Too many Dans.
Too many Dans. Only Dans over here. Steve, what is something you believe about the markets, about the economy? You can do them one by one if you want. You can mash them together that you think most of the other folks, including us, don't believe. Do you know what I'm saying? Like you have a new framework for how you manage money. This is your name's on the door, which is something that's kind of unique. I think I've learned a lot about what you guys were doing within Front Point. I grew up in the hedge fund business. I understand when, you know what I mean? Like you have a different set of responsibilities now. You have, a fiduciary responsibility that looks very different than kind of how you made your name in the business. So what's something that you believe about managing money, investing, let's say, that most others don't, and they better get ready to kind of come around to it?
Well, the first thing I think that most people don't understand is that the banking system in the United States is very healthy. So, if you're looking for some sort of, Silicon Valley aside, which we could talk about, but I just think, generally speaking, the banks are very healthy. They're far better run than they were, especially the large banks. The leverage is much lower. The liquidity is a lot better. So anything that could happen in the banks, like let's say office real estate and some of the regional banks, is not a systemic problem. And it's a very important backdrop to have in the back of your head.
But did it amaze you about Bank of America's activities, when yields were, at 50 basis points and loading up on long-dated to me, that seems just like an epic fail by one of the biggest banks on the planet.
It was a bad business decision, but it's not a sink the bank decision. Loading up on subprime assets.
Could it be if interest rates are 10% or higher?
No, because not the only you need two things for that to be important. You need big losses on a mark-to-market basis, but then you need the bank to start to lose a lot of deposits, like Silicon Valley did, to force the bank to actually sell and crystallize it. And then it's a problem. Until then, it's not a problem.
Right. And again,
then it's just an income statement issue.
But you just outlined a scenario which you guys lived through again in 2007, 8 into 2009, where Bank of America, a whole host of banks did go under.
But it's all about leverage. And so to Steve's point, I think the leverage in these big banks, they could absorb. Yes, those are big mark-to-market hits. They were billions and tens of billions.
I'll give you a very simple statistic. Citigroup in 2007, just before the crisis started, was levered officially 33-1. If you added all the off balance sheet nonsense that eventually came back on balance sheet, it was probably 40-1. Today it's 12-1. That's night and day.
But this goes back to their concern from earlier that hasn't a lot of that risk been placed on sovereign balance sheets, right? So
or in the non-bank, or
non-banks,
private
right?
equity.
So like to me, and again, this is something that's kind of strangled China's growth over the last decade or so. So for instance, a lot of this stuff has just kind of been kicked the can down the road, sort of thing. So I don't know. I mean, that's what I'm just trying to kind of get at. I'm not trying to figure out and put my finger on when the next calamity is going to happen, but in my lifetime, I entered the markets in 1997. There's been a whole host of calamities, and they come about every 10 years or so. And the thing that we can't see right now is likely to be the thing that kind of trips us up at some point again, And if you think about, again, I just mentioned the bear market in 2022. Pretty orderly. You could say the COVID decline of 35%, pretty orderly because it happened really quick and kind of recovered so quickly. So I think we all have a little PTSD from watching the S&P get cut in half from the highs in 07 to the lows in, 09, and then the same thing again in, the early part of this decade. So that's the thing. I mean, it's going to happen again. But I guess the message, Danny, is that you buy it down 50% because it's always going to make a new high.
See. One last story, and then because in the movie, I just want to make this crystal clear how accurate this was. Is that we're equity people hiding in a fixed income conference in Las Vegas. We get pushed into this room where H&R Block, which owned a mortgage company called Option One, was presenting. Steve was sitting next to me, a little bit distracted, probably checking stock quotes, whatever, texting. And this guy's speaking, and The guy says something about our losses are going to be capped at 5%, and Steve looks up like UFO had just flown by. Looks at the guy, and he raises his hand, and it's not Q&A. I mean, they got that perfectly right, and I am sitting next to him, and the guy goes, I'm sorry, what? He goes, is that a question? No, zero. Zero what? Zero chances your losses are capped at 5%. Okay, and then he puts his hand up like this, and he puts his zero up. So, okay, and I'm like, okay. And I look at Steve, and I'm literally shrinking in my seat. And Steve takes a phone call and gets up and leaves.
It was my wife.
Leaves me in this conference with fixed income guys that look like they want to kill me. That happened. It actually happened. That was a lot of stuff. But anyway, I wanted to
happen.
end with that. So that's Steve. I want him to find this, do this, and do something else. And we're going to find some great opportunities here in this market.
Well,
so.
let me say this. I am awed by the old Steve. I'm mesmerized by the new Steve. But I love both of them equally, and we thank you for joining us, Steve. It's a pleasure.
Thanks for coming on.
Thank you.